Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Tuesday, January 9th, 2018, and this is the daily report for gold and silver. We do have softening in the precious metals, except for palladium. We'll talk about that when we pull up our technical studies, with gold trading off about $6.80. Closing at $13.60. We did send out a trade alert this morning recommending that you raise your stops, and we'll also discuss that during the technical studies section. Silver under pressure, down 13 cents, closing at $17, but it did hit a low of $16.94, and so effectively all long silvers did pull profits today. Now, that all in light of a fractionally higher U.S. dollar up about 0.1%, 92.22, and in light of the fact that we still have an extremely strong risk-on environment with all of the equity indexes closing higher today and closing at new record highs. Now, palladium, as I said, that did close higher, up 30 cents, and Bitcoin is dropping now below 15,000 with the CBOE at 14,650 and the CME's futures contract at $14,505. Traders, for the first time since gold pricing reached the high of approximately $13.27, and that, of course, occurred on Thursday of last week, we have seen some real evidence of a potential correction as opposed to a simple consolidation. The reason that I'm saying that is after experiencing roughly a $90 move from these lows of $12.37 to $13.27, we have seen the market consolidate over the following trading days, this being Friday and this being yesterday or Monday, in which they did close lower. That's evident by having red candles. But if you look at the body size, the market closed very closely to where it opened Friday as well as yesterday's activity. Today seems a little bit different. It opened near the highs of the day and closed near the lows of the day, currently trading at around $13.40. The low that it hit today was approximately $13.09, so we've had a lower low than the previous 2 days, and we've had a much larger body size. It is for that reason that this morning I sent out a trade alert recommending that you trail your stops up to just below 1306. Now, the rationale behind that particular price point is I've created a new fib retracement, which simply accounts from the highs that were achieved at 1327 from the lows that were seen at 1237. When we do that, the first target area we would get for potential support comes in at about 1306.60. It is a 23% retracement. Below that is the 38% retracement coming in at 1293, with the 50% retracement coming in at approximately 1280. And by putting it just below 1306, what we are saying is if the market does continue to trade sideways or consolidate, we will remain in active long. Of course, we are long back from 1265. And what I'm attempting to do is to lock in the greatest percentage of profits that we can and still protect ourselves. So if the market wants to continue to run, we have an active position. It's a double-edged sword without a doubt. But my sense is that if the market consolidates, it should hold roughly above this particular price point, 1306. A real correction will take the market at minimum to 1306, and more than likely, even a shallow retracement could occur, only going to a 38% retracement. Of course, a deep retracement would be something like a 61% retracement down to 1270. Now, while I don't believe that is how this will unfold, with today's candle, it does give us some technical information that alludes to the potential of lower pricing rather than consolidation. Traders, it is for that reason that I am recommending that at this point you trail your stops higher to below 1306. And traders, next, I do want to look at silver. Silver also under pressure today. The one thing that we can say is we've been alluding to the fact that both in gold and silver, we have seen this kind of a rounded top in which we saw some real resistance enter into the market at the recent highs of both gold and silver. We also recommended that for those traders that are long gold and silver or just long silver, that you have your stop in silver just below $17 per ounce. The close in silver today was 17. However, the low today was 16.94.5. So for all accounts, all of our silver traders should have got stopped out with a pretty respectable profit today. My recommendation is to be neutral or sidelined in your silver trade, meaning having no active trades going with silver. And traders of the precious metals group, including gold, silver, platinum, and palladium, only palladium closed higher on the day. And in fact, it is palladium that has been running in a unique manner, bucking all of the trends when the precious metals come under pressure. Palladium is currently trading at $1,096.30. Net change today was only up about 40 cents, but it was a positive move even though it came well off of the highs. The interesting thing about palladium is if we look at the shorter term 50-day moving average, we can see that for the better part of the last year, year and a half, really since July of 2017, we have had this market effectively, for the most part, 95% of the time, trading above the 50-day moving average. You can see the support as it comes in here, but there's been a tendency as pricing got extended to actually sell off, but these sell-offs would only take you back to the 50-day moving average. That's an extremely bullish move when we consider the technicals behind palladium. The fundamentals, of course, are the primary factor that is moving this market, and that is limited supply and strong demand for the precious white metal. Now, you can see how far this last rally has taken the price point above the 50-day moving average, so that even if we saw this move into a corrective stage just back to the 50-day moving average, it would have, what, about $46 of price to move down and still remain extremely bullish. There are those analysts out there that believe that there is a possibility that palladium will take over in terms of its pricing to that of gold. Now, while I find that plausible, given that they're only a couple $100 apart, I still believe that that is an unlikely factor. But the fact remains, palladium is running to the upside in a way that we have not seen in any other precious metal. Traders, we did send out a trade alert earlier this morning recommending that traders raise their stops on their current long gold trade. Last week, we did send out an email in which we said that it might be wise to take that stop to the market. We had about 3 or 4 subscribers email us, contact us, asking us when to re-enter the market. And my answer to those few subscribers is that if the stop gets hit that we're currently looking at, you got out a little bit higher and you want to re-enter when all of us re-enter our next trade. If the market continues to consolidate and moves higher to the upside, I will notify you guys directly that you should re-enter the market. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.